Hello everyone, near and far, dear friends. I welcome you on my YouTube channel, Global Finance, Financial Markets and Banking. My first video last Thursday, I described my personal and my research interests and my concept in general. Today I would like to inform you that I decided to introduce so-called playlists. I mean a playlist with the purpose to group all videos by topics. And I found 5 main topics, and I will produce video clips to all topics, maybe 2 or 3 to one topic and later to another topic. So it must not be in this range. But the background is I'm not interested to talk 5 months only about money theory and banking. This is the first topic only. The second topic for me is public debt, banking and sovereign bond markets, especially the dilemma of state-bank nexus. There are some risks for banks if states issue sovereign bonds like US bills, and banks, central banks or business banks invest in such public securities. This is the second topic. The third topic, the third playlist will be payment innovations of the world. That means international payment transaction and monetary infrastructure. We have new technologies. We have cross-border payment. We have mobile payment, and behind this very comfortable instrument is a high sophisticated market infrastructure, and it's a geopolitical power game of US, of Europe, of European banks and payment service firms, and of course of China. I think China established an independent payment system like Union Pay, for example, absolutely independent from the US system or from the Western systems. In Europe we have a high dependency, but there are interesting initiatives to establish, such European payment systems in the opposite to PayPal and Amazon Pay and Visa, Master, and so on. These are not bad firms, but they are under control of the US government. Last but not least, and the Eurozone, the Euro needs an independent market infrastructure. This is clear. And then I have a topic I mentioned in my last video, a national fragmentation of the European banking market, banking culture of Europe, And yes, this can be a favor. All business is local. But this splitting has some disadvantages for the efficiency, for the potential of the European banking market, and for growth of the real economy. And I would like to talk about the European player and about the local player in different countries, and payment systems in different countries are very national. So my last point, my last playlist here will be based on the topic project finance, multinational development banks, private-public partnership in Europe and in Asia. We have the same term, private-public partnership, but the idea and the construction is very different in Europe and in China. And if I'm in Beijing, very often we talked about PPP, but in Europe we understand it a little bit different than the Chinese scientists. So these are my topics, and now I can come to the point today. I try to link all my theoretical explanations with actual events. And last month in July 18, Donald Trump signed the Genius Act. It is named as a landmark law regulating stablecoins in the US. The goal is to provide legal clarity for stablecoins and strengthen the US dollar role in the digital age. I don't wonder that Donald Trump and his imperium, his business firms, make much money with stablecoins, or the stablecoin issuer, or Donald Trump as a stablecoin issuer can make much money in this hype started 2015, by the way. And so it's not new, but now the US administration tried to implement stablecoins, these are cryptocurrencies, yeah, in the US money system, and US dollar is the most important currency of the world. All central banks use US dollar as currency reserves. All trader or ex-import firms usually use US dollar outside of the Eurozone. And so this development is very important for the world. And the other point is that in Europe we have a regulation. Maybe we have the first comprehensive legal framework for crypto assets in Europe across the European Union since 2024. Okay, it's not my point today to explain this market in crypto asset regulation of Europe, but you know, it's interesting to understand stable coins to compare with banking money, with cryptocurrencies or other terms of the money theory. So there exist different terms, different definitions. The first is fiat money. Fiat money is not really my favor. It is not, in my opinion, a really scientific term. Fiat money means money with no intrinsic value and no backed by physical assets. It's declared legal tender by government authorities. And the historical or philosophical background, you know, is Latin fiat from the Bible, let be done. It symbolizes the creation of money by sovereign decree. So, and fiat money is very often used by critics of critical paper because established money systems are negatively worthless paper, enabling inflation and manipulated by politics and other negative characteristics. The other term to must mention is virtual money. What does it mean, virtual money? Virtual money says only that money that doesn't exist physically, but are used exclusively in a digital environment. It's a very broad term that can include various types of digital value depending on the context. For example, coins, banknotes, digital money used only electronically, and virtual money must not be legal tender. It can be privately issued, for example, in games or loyalty programs. So cryptocurrencies are virtual money like Bitcoin or Ethereum. Stablecoins are virtual money, stablecoins on US dollar or stablecoins on euro. And gaming currencies, additional central bank digital currencies like digital euro is a kind of virtual money. So to talk about virtual money makes not so much sense, but only to mention it. So after all these definitions, it's not my turn to talk about cryptocurrencies, yeah, because cryptocurrencies, there are many videos, and it's a phenomenon since 2009, January 2009. The Bitcoin was launched, and now we have hundreds of cryptocurrencies, maybe 30 more important kinds of cryptocurrencies. And stablecoins are between. It's a cryptocurrencies, but linked with a reference established currency like US dollar. It has a fixed value based on an established currency. So now we will come to the money banking, to the old style of credit money or credit-based money, credit-based money in a two-tier banking system. So let's go to the next slide. Yes, monetary theory, credit money creation in the two-tier banking systems. That means, as most of banking systems in the world, not only Western countries, have such two-tier structure with a central bank and with business banks. And in this banking systems, we have two kinds of money, and I will talk about it. So in the two-tier banking systems, we see payment instrument or payment banking money. It can be cash, it can be book money, and it can be a substitute or a money surrogate. Central bank money and the digital euro will be introduced maybe next year, or as the first test period. We will see at the end of 2025. China started earlier and has mixed experiences. So central bank money we see as cash and as deposits of business banks on central bank accounts. That means both money types, cash and deposits of business banks on the central bank accounts, is central bank money. That means the digital euro, for example, will be a kind of central bank money like cash, but maybe in a special wallet. So, and this central bank money is part of the so-called Geld money basics, high-powered money, or M0 called. So, and here we see some kind of substitutes of surrogates like voucher, cryptocurrencies, mobile payment, prepaid debit cards, gaming currency, and other barter token, maybe based on natural goods. So these substitutes are very complex today. Some years before in my lectures I talked only about check and commercial a letter of credit and so on. So, but now we have such cryptocurrencies and we have stable coins and other. So to describe now the creation and the circulation of central bank money, we should look in the very simple central bank sheet. We see, oh, this is in German. Here is the English version. Simplified central bank balance sheet. So assets on the left side, you see government bonds or securities, you see loans to commercial banks, you see gold or foreign exchange reserves. All assets the central bank can buy or create independent, and the central bank will create at the same time liabilities. That means central bank money, business bank reserves, cash. Yeah, every business bank can change the central bank reserves in cash. And so we have on the right side the liabilities of the central banks, deposits from the commercial bank. And in a business banking system, here we see a very simple consolidated balance of the commercial banking systems or business banking systems. We see assets and liabilities in the opposite. Loans to business and households or assets on the left side, and securities are on the left side. For example, banks can buy sovereign government bonds and so on too. And the reserves at the central bank, deposits by the central bank, are assets for business banks. Cash holdings, if a bank has cash, over the night it's not the case. But if the business bank has cash, then it's an asset on the left side. So claims to other banks are assets, and demand deposits, saving and time deposits of customer of banks, bank equity capital, interbank liabilities, and other liabilities are on the right side of the consolidated balance sheet. So later we can look in different balance sheets, maybe of the Federal Reserve System or of the European Central Bank, to explain it again. So what is interesting, that the bank money, central bank money and booking money of commercial banks are the basic for money circulation, money volume in a country. The money base, money created directly by the central bank, narrow money, intermediately available for transactions, and we have M2, M1 plus short-term savings, and M3 money 2 plus broader liquid financial assets. That means the discussion at the moment is, what is about digital central bank money? Is this a kind of M0, MO, or M1? And what is about stablecoins? Stablecoins are cryptocurrencies, but if they will be managed by commercial banks, by saving and loan associations and credit unions in Germany too, this is a plan, then maybe this money volume would be broader. For example, here we see money market funds, and money market funds are managed by investment funds. These are not banks, so maybe it's a shadow money. So, ladies and gentlemen, dear viewer, near and far, dear friends. After a break, I have no daylight, you see, but this is the end of my presentation today. With this, I have addressed a few fundamental concepts of money and banking theory. We will need to delve deeper into different terms, definitions, and consequences of technological regulatory innovations. Later in individual clips, I learned with these first steps that I have to specialize, not myself, but my video clips very much. Sorry for this little bit long recording, but later I will be better. And thank you for your patience. I'm still in the experimental phase, and I'm working without professional editing. That may come later, or maybe not. I'm not sure. But please give the video the thumbs up, share the video, comment below the video. Your questions are welcome. Please subscribe to the channel and activate the bell so you don't miss any things, any clips in different playlists I explained at the beginning of the video. Thank you very much. Have a nice weekend. Hope to see you sometime, and goodbye.